Hey everyone, and welcome back to the channel. Today, we're diving into a topic that might seem far off, but trust me, it's approaching faster than you think. We're talking about the 2026 estate tax exemption changes. I know. Estate tax sounds like something only for the super wealthy, but what's coming could affect more families than you'd imagine. So grab a coffee and let's break down what's happening and why you need to pay attention right now. First, let's get on the same page. What exactly is the federal estate tax? Simply put, it's a tax on the transfer of your property and assets to your heirs after you pass away. Think of it as a final tax bill from Uncle Sam. But here's the key: not everyone has to pay it. There's a very generous exemption amount, which is the total value of your estate. That's completely tax-free. Anything over that amount is what gets taxed. Right now, in 2024, we are living in a golden era for estate planning. The federal estate tax exemption is at a historic high. For an individual, it's over $13 million. For a married couple, you can combine that, giving you an exemption of over $27 million. That means you can pass on a very significant amount of wealth to your loved ones without owing a single penny in federal estate tax. This generous number is thanks to the Tax Cuts and Jobs Act, or TCJA, which was passed back in 2017. But here's the critical part: the reason I'm making this video today. This law was written with a built-in expiration date. The high exemption amounts we're enjoying right now are temporary. But on January 1st, 2026, unless Congress steps in and writes a new law, the exemption amount is scheduled to be cut in half. Automatically, it will revert back to its pre-2018 level, which, when adjusted for inflation, is expected to be somewhere around $7 million per person or $14 million for a married couple. Now, you might be thinking, $7 million is still a lot of money. I don't have that much, so this doesn't affect me. And for many people, that's true. But here's where we need to look closer. First, your estate is probably worth more than you think. It's not just the cash in your bank account, it's your house, your retirement accounts, like your 401k and IRA, any investment portfolios, life insurance policies you own, business interests, and even valuable personal property like art or collectibles. When you add all of that up, especially with rising real estate values and a lifetime of saving, you might be much closer to that $7 million mark than you realize. Let's think about a hypothetical family. Let's call them the Smiths. They own a home in a decent neighborhood that's appreciated a lot over the years. They've diligently contributed to their retirement accounts. Maybe one of them started a small business that's now quite successful. Individually, these assets might not seem astronomical, but combined, their total net worth could easily push them over the future $7 million threshold. If they don't plan for this, their children could face a surprise tax bill of hundreds of thousands or even millions of dollars. The tax rate on the amount over the exemption can be as high as 40%. That's a huge chunk of their inheritance gone to taxes simply because of a change in the law. This isn't just about preserving wealth for the sake of it. For many, it's about ensuring a family business can continue to the next generation without having to be sold off to pay a tax bill. It's about making sure the home you worked so hard for can stay in the family. It's about providing for your children's future and giving them the opportunities you dreamed of. So the big question is, what can you do? The good news is there's a window of opportunity between now and the end of 2025. You have time to act, but you can't afford to wait. The key is to take advantage of the current higher exemption amount before it disappears. One of the most powerful strategies is gifting. The IRS allows you to give away a certain amount of money each year to as many people as you want without it counting against your lifetime exemption. This is called the annual gift tax exclusion. For 2024, that amount is $18,000 per person. So, a married couple could give $36,000 to each of their children, grandchildren, or anyone else, tax-free. Over a couple of years, this can move a significant amount of money out of your taxable estate. But the real power play right now involves using your lifetime gift tax exemption, which is tied to the estate tax exemption. Remember that big $13 million number. You can use that exemption to make large gifts during your lifetime by gifting assets now. While the exemption is high, you can lock in that value and permanently remove it and all its future growth from your taxable estate. The IRS has even clarified this with what's called an anti-clawback rule. This basically means that if you use your high exemption to make large gifts before 2026, the government can't come back later and claw back those gifts to tax them if the exemption drops. You get to keep the benefit of the higher exemption you used. This is a huge green light for proactive planning. What kind of assets should you consider gifting? It's often most strategic to gift assets that are likely to appreciate in value, like stocks or real estate. By gifting them now, you're not just removing their current value from your estate, but all the future growth as well. If you gift $1 million worth of stock today and it grows to $2 million by the time you pass away, you've effectively removed $2 million from your estate while only using $1 million of your exemption. Of course, making large gifts isn't as simple as writing a check. You need the right legal structures to do it properly. This is where tools like trusts come in. Trusts are not just for billionaires. They are incredibly flexible and powerful tools for families of many different wealth levels. You could set up an irrevocable life insurance trust, or ILIT, to hold a life insurance policy, removing the death benefit from your taxable estate. Or you might use a spousal lifetime access trust, or SLAT. This is a more advanced strategy where you can make a gift to a trust for the benefit of your spouse, getting the assets out of your estate while your spouse can still indirectly access the funds if needed. There are many types of trusts, and the right one depends entirely on your specific situation and goals. The bottom line is this: the clock is ticking. The end of 2025 might seem far away, but creating and implementing a solid estate plan takes time. You'll need to work with qualified professionals, an estate planning attorney, a financial advisor, and a CPA. They need time to understand your unique family situation, your finances, and your goals. They need time to draft the right documents, retitle assets, and ensure everything is executed perfectly. These professionals get incredibly busy toward the end of the year, and you can bet the last half of 2025 is going to be chaotic in the estate planning world. Waiting until the last minute is a recipe for mistakes, or worse, not getting it done at all. I want to be clear, this is not financial or legal advice. I'm a content creator passionate about sharing important information. The purpose of this video is to sound the alarm and empower you to take the next step. Your financial situation is unique, and you absolutely must seek out personalized advice from qualified professionals. So, what are your action steps? First, calculate your net worth. Add up everything you own, don't guess. Second, think about what your goals are for your family and your legacy. Third, and most importantly, schedule a meeting with an estate planning attorney. Ask them about the 2026 sunset provision and how it might impact you. A good advisor will help you navigate this complexity and build a plan that gives you peace of mind. The window of opportunity is open right now, but it is closing. By taking action now, you can potentially save your family a massive amount in taxes and ensure that your hard-earned assets go to the people and causes you care about most. Don't let this chance slip by. Thank you so much for watching. I hope this was helpful. If you found value in this video, please hit that like button and subscribe for more content on personal finance and planning for your future. And share this video with anyone you think needs to hear this message. Let me know in the comments if you have any general questions about this topic. Stay proactive, and I'll see you in the next video.